Today is Tuesday, June 17th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. We did have the US retail sales number come out this morning. It came in at minus 0.09 when the street was looking for minus 0.06. So this does knock us off the trend of having positive US retail sales for the last few months and definitely could have contributed to some of the losses the market saw today. And for the rest of the week on Wednesday, we're going to get the initial jobless claims along with Jerome Powell's Federal Reserve meeting. There's a 99.99% chance that rates remain the same at this upcoming Wednesday meeting, but it is going to be worth watching just in case he does imply when the next cut could be. But as of right now, it is looking like it's not going to be until September. If we take a look at the SPY chart, you'll see that the SPY price is still below the 5-day moving average, but the SPY price and the 5-day are still above the 15. Last Thursday, when I sold the 20% out of all of my positions, I had a feeling that the markets were starting to lose some of their momentum. I definitely don't think that we're in for the type of drop that we saw towards the beginning of March into April, but it wouldn't surprise me if over the next week the market stayed relatively flat or even declined just a little bit. So I've taken out the 5 and the 15-day moving average and replaced those with the closest support level and the closest resistance level. It would be about a 2.10% drop for the S&P 500 to reach this bottom support level. I do think that it's far more likely for the S&P 500 to reach this support level before bouncing up and possibly going through the resistance level, rather than the markets finding enough momentum as is to get above it. So the amount that I have in cash, I am going to save and see if the S&P 500 does reach this bottom level. And at that point, I would be looking to increase some of my positions and even possibly adding a few new ones. And if I'm wrong on that and the S&P 500 decides that it does have enough momentum to get above this resistance level from where it is right now, I would be totally okay with that because I do still have a good chunk of my portfolio actually invested. And if the markets do rise from where they are right now and there's no real justification as to why they're reaching all-time highs again, I very well could trim another 5 to 7% out of all of my positions. And if we take a look at the MACD chart on the bottom of the screen, you'll see that it's pretty much been flat since the beginning of June. I found that the MACD chart sort of trades in what I consider waves. Almost every bear and bull cycle trades the same way. It starts off slow with a defined peak in the middle, and I found that it's pretty rare to have more than one in a row. An example of that would be this bullish moment that we had towards the end of April all the way to the end of May. It started off pretty uniform like all the other ones before slightly dipping in the middle, and it's at this point usually when the MACD starts to go down that it does go all the way down and then ultimately reverts back to a bearish moment. But you can see with this one, it dipped in the middle and then restarted before ultimately going back down. And at least to me, it looks like the last few trading sessions has been the start of another bear trend. So I'm going to be keeping an eye on this over the next week or so. And if it does continue to drop, the point I think it's going to be at its peak where it's the lowest, depending on where the SPY price is in relation to the support level we talked about, I think could be a pretty good time to use some of the cash that I have to increase some of my positions again. These are going to be all 14 of my current positions. Right now, Microsoft, Meta, Nvidia, Palantir, and Spotify make up my top 5, and those make up 34.75% of my portfolio. Dave, which has 128.4% gain in my portfolio, has bumped its way out of my top 5, and the recent gains in Spotify has moved it into my top 5, which now has a 43.68% gain and makes up 6.05% of my portfolio. Right now, I do have 76.38% of my portfolio invested, which leaves me with that 23.62% sitting in cash. Unless the SPY price drops to the support level that we talked about earlier, I do intend to keep my portfolio exactly the same. Since Monday, my portfolio saw a gain of 0.08%, Pershing Square had a loss of 0.69%, and the S&P 500 had a gain of 0.08 as well, which brings us year to date. My portfolio is at a gain of 16.87%, Pershing Square has a gain of 7.25%, and the S&P 500 is at a gain of 1.95%. That's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.